Adani Power, NHPC, Indiabulls Power, the who's who of the institutional world have participated?
You know, the demand for power is very strong. India is going to remain in deficit for the next several years. And so I think the power companies definitely need to add more generation capacity. And for that, they do need capital. But obviously that while they need the capital today, the actual earnings will start coming through only a couple of years down the road, because it is a long gestation sector. I mean, projects take a long time to generate earnings. So for the so you obviously, I think, are going to see the real sort of leverage of operating earnings coming later, while the capital needs are now. So in that sense, I think you can take a very long-term view, and you probably will do okay. But in the very short term, you've got to look at where the earnings are going to be benefited sooner rather than later.
Do you own power stocks? Do you have a significant commitment or exposure in that sector?
Yeah, I mean, I think there is a lot of opportunity in the power space, given that India is so deficit. So as a sector, you can't ignore the sector. We do like selected stocks for sure. And I think it is a good story, but you have to be careful on the valuations.
But Punita, it's evident that money is coming to India via the QIP route. But what about money outside ETF? Money which is perhaps coming to long only and closed-ended funds. Is that sizable in nature?
Well, I don't think that there is that much demand for I think another issuance so quickly, because the premium on the closed-end funds have declined sharply. So that is one indication of, and also we are finding that a large part of the allocations have gone this year into ETFs rather than just actively managed funds. And that is mainly because people are just taking an allocation call to the region or the country before they do active stock picking. So yes, are people positively inclined towards emerging markets? I would say yes, they are, and we have seen significant money go into emerging markets, including India and Asia. But are people really going right now for very, the actively managed funds? I would say there's 50-50. They're going, a large part of it's also going into just passive ETFs.
Punita, stay with us. The break on Market Makers. When we come back, a conversation, or the flavor of our conversation, will be more towards levels, outlook, and the road ahead. Welcome back. You're watching Market Makers with Punita Kumar Sinha, Senior Managing Director, Blackstone. Let's now shift gears from micro to macro. It's important for us to understand first the global picture and then implications of global picture for a market like India. Punita, a consensus on the street is that weakness in dollar will remain, and that will continue to drive money to commodities and to markets like India. What's your assessment?
I think everyone obviously realizes that the growth in Asia is, and broadly speaking emerging markets, is actually significantly better than the developed world. So they are people who've been underweight emerging markets and the developed world, who are looking for growth, and particularly growth-oriented investors are looking to allocate more and more to the region. So I think over a period of time we'll keep seeing that. However, the US markets have underperformed quite a bit this year, as have Europe, compared to emerging markets. And if the earnings in the US continue to also come through well, there is a possibility that people will start allocating more to US and European equities as well in the short term. So given the relative outperformance of emerging markets to the developed world, I think my view is that there could be more room for liquidity going now from here on in the very short term into the developed markets, although the long-term theme continues to be liquidity flowing into more and more allocations happening to growth regions of the world, which include India.
So Punita, if markets have to chart their way ahead from October 2009 to October 2010, is there a probability that we'll make and touch a new all-time high rather convincingly?
I don't know. I think, as I mentioned, based on the analysis we've done, typically, after a very sharp recovery in equity markets from a recessionary scenario, of course, India was not in a recession, to a recovery scenario, the stock markets, that's the time when stock markets rally the most sharply. And after that, they they trend upwards if earnings continue to recover. But it's not with the same kind of momentum and, fierceness that they rally prior to that. So based on that theme, if earnings, assuming that earnings estimates continue to get revised up, and there's no other, global shock, and earnings continue to move up nicely, that the equity markets could overshoot on the valuation side, but that doesn't mean that they would probably, definitely we won't see the kind of returns we've made this year.
Oh yes, indeed. Between 2008 and 2009, the return in between two Diwalis, it's been 90% plus, and it's unlikely that 90% plus will get replicated again. Punita, but just to really understand the scenario, and there are two scenarios. One, from October to March, and after March, it could be a different world because of Fed's monetary policy.
I think, it all depends on what happens between now and next March in terms of what happens to earnings. If the earnings continue to come through better than expected, and if commodity prices are continue to remain strong, then yes, I think there is a bias towards tightening after that.
But will China be again the joker in the pack, the wild card for global economy for the coming year?
I think it's already been a game changer, and it's part of a secular theme. So I think to the extent that the Chinese continue to invest in infrastructure, and they need, definitely have a huge appetite for commodities, they're going to continue to buy into commodities. You've already seen that they are buying, they have been taking stakes in companies, commodity-oriented companies. So there definitely is a lot of that happening, M&A activity coming out of China for where companies or the CIC, etc., are buying into companies that are commodity oriented.
The fact that there was a fear and a panic unwinding 3 months ago in the Chinese market, is that fear now behind us, that China is unlikely to tighten further?
For now, I think it seems that, because there is a lot of liquidity and the news flow is continuing to be good, and I think the signals from all economies, even China, of course China has been pretty strong, and so whatever the correction that happened last month in China is now reversed, and the markets are back up on on an upward track there. But again, this is all part of a liquidity phenomena. People are putting more and more money into equities, and the earnings are driving some of that late cycle move in stock markets.
All right, Punita, let's wrap up the show with your final word. As we speak, and it's October 2009, is Punita Kumar Sinha bullish or cautiously bullish?
Long term, I'm bullish on India. Short term, I would say, given where the valuations are and given how much the markets have rallied, I'm cautiously bullish. But of course, keeping in mind that India from here on is going to be affected also by any global shock, if there was one. I'm not seeing it happening, but if there was one, that who knows that what that might create in terms of market environment.
Punita, great to have you on ET Now, and hope to see more of you going forward. Thank you for joining us on Market Makers.